So what is risk reward analysis? Simply put, as the words imply, it's the risk you're willing to take for the reward you possibly could have. And I hear all the time people going on TV, the media, talking about, well, the risk reward today is not lining up for me. And I heard recently someone talk about the market in general, right? Especially the US market, the S&P 500, talking about how the markets have done so well that getting into the market, if you're not in already, the risk is a little bit too high because you would be entering at a high point. Well, in my opinion, it is high, obviously 15 or so % higher from when we started the year. But I think this is going to be a low point or a lower point than what we're going to see down the road. So I think by the end of the year, we will be even higher. So the risk reward has to be analyzed. You could also do risk reward versus an individual stock. Buying a stock today, what are the risks? What are the downside risks versus the upside potential? I know that when I get into a name like Bank of America, and we have a chart on Bank of America right now, we can show it. It shows how bad or how poorly Bank of America has done. And when I look at the name, again, this name was once upon a time $50 a share, in and around 50. Today trades under 30. You're looking at a 40% decline from the highs of the last few years. So what are the downside risks? I would say downside risks are probably minimal, and that it's only a matter of time before we see the upside on a name like Bank of America. Bank of America has been getting into or has had a little bit of negative commentary around it based on their loan portfolio. Similar to the regional banks, Bank of America also has some long-term debts, long-term loans, long-term bonds on their books. And as we know, as interest rates has gone up so much, the value or pricing of these long-term bonds has gone down. So if you were to market these bonds to today's market, you would see that their prices are down. And if the banks needed, or Bank of America needed to sell these bonds, they would take a loss. So we've been hearing that Bank of America has a lot of these bonds on their books, and that's why they've been having more difficulty than a name like JP Morgan has. But make no mistake about it, Bank of America is a massive bank, second largest in the United States. I believe it is only a matter of time before we see this bank rebound. It also pays a decent dividend in that 2.5%, 3% range. So you get paid a little bit while you wait. But risk versus reward, I think that's something everybody needs to do before you make an investment, before you buy a bond, before you buy a stock, GIC. Some people will say, wow, what's the risk reward on a GIC? Well, the reward is you get a decent interest rate of, let's say, 5%, 4.5%, 5% today. But that's the reward. But what's the risk? Well, the risk is your money's tied up for the next year or two, or however long you tied up, or whatever you purchased the term of that GIC for. So that could be a risk, because if the market takes off, maybe a 5% rate of return doesn't look so good if the rest of the market is making 15, 20%. So there's always risk versus reward. And I think it's very important for individual investors to consider it before you make your investment decisions. And Bank of America, in my opinion, stacks up or lines up pretty good in terms of the risk of owning it today versus the reward you could have going forward.